economist says it's hard to understate how important these changes really are. Joining us now is Dan Rohinton. He's portfolio manager at IA Global Asset Management. Dan, thanks a lot for joining us. How are you explaining this macro environment to clients? They're watching, obviously, markets come down. They haven't collapsed precipitously yet. Certainly here in Canada, the declines are more modest than they've been in the United States. But the path of travel on equity markets appears to be down right now, and there's all kinds of macro uncertainty.
Yeah, and I think really to set the table of this conversation, I think it's there's a quote from a very evil man in the founder of the USSR, but it does speak to the moment. There are weeks where there are decades where nothing happens, and there are weeks where decades happen, and these are some of those weeks. And there's two things, Paul, to really zero in on that's happening in Europe. The first part is the fraying of the transatlantic defense relationship between the United States and Europe. So we are seeing the largest remilitarization across Germany, France, the UK, and Italy that we have seen in the last 75 years. And that's because the United States has asked Europe to be self-sufficient on defense so that they can spend their Department of Defense budget elsewhere, which is basically the Asia Pacific. So there is a super cycle that is happening in the defense industrial complex in Europe. And Germany really kicked that off with $200 billion in a special defense fund with the promise that there will be more as time goes on. And Germany is not unique in this conversation. The second thing is the infrastructure reinvestment and the reindustrialization that they're attempting to push through. And this is where they announced a $500 billion special fund that is around infrastructure investments, where it's downstream to the public sector, other parts of the federal agencies, the provinces and the states. But the point being is this: Europe is now spending on a fiscal basis the same way the United States already is. So we are seeing a broadening out in the economic growth, not just from the United States, but actually in Europe, which we haven't seen something like this in the better part of a decade plus.
And you've got a couple of European names that you are owning on behalf of clients in light of these views. One of them is a German defense company known as Rheinmetall.
Yeah, Rheinmetall. It's basically, think of it as the supplier of artillery shells, anti-drone and electronic weapon systems to Ukraine. They are one of the biggest European providers of those types of weapons of defense to Ukraine. But it's also important to understand there's one base in the one base called the Ramstein base, where the U.S. forces have more tanks than all of German army combined. So don't underestimate just how many years of defense spending we have coming up. And what the important part here is, it's not going to Lockheed Martin for the F-35 program, it's staying local. So Rheinmetall is that go-to in Germany, and that's why the stock has seen such a tremendous run. And because the runway for growth is not just 2-3 years, it's several years beyond that at the very least, with further expansion from there. So Rheinmetall is that local player. There's Leonardo in Italy. Think of BAE Systems in the UK. So there is an entire sector that has been in atrophy for decades now that is being reinvigorated in a very, very short period of time.
And what makes you confident, Dan, that the rearmament period is going to be as extensive and as long as you think it is? Is this the break that the United States appears to be making with its European allies?
It's an attempt to say, and there's a comment by actually a Polish politician that summarized it really well, I think. His comment going into the emergency conference of the European leaders was, we're relying on 300 million Americans to protect 500 million Europeans from 140 million Russians. And that's really what sums it up. So when you think about Rheinmetall's facilities, they're already booked out for the next 3 years. So we're not talking about 2027. We're talking about what goes on from there. So these facilities and these companies have already been fully utilized for all their facilities for the next few years now. So we're really talking about an elongation of this runway. And I don't say this with glee or anything like that. It's just talking about the realities on the ground and having an informed basis for that conversation, because that is what we're seeing.
What about the effects more broadly of expanded fiscal spending in Europe? Germany, as we know, had to agree on relaxing debt and deficit limits to commit to the forward path on defense spending. What are the consequences for Europe and European stocks in expanded spending by major European governments?
Yeah, and the best way, it's really complicated because Europe is pretty Byzantine in how it has its architecture and structure set up. So I'll really summarize and zoom out for this conversation, and I'll tell you, fiscal expansion and reflation in Europe is what they're attempting to do. They're doing it through the $500 billion special fund they're trying to push through before the new government is sworn in with the current coalition. But that's also likely to happen in other places like Italy as well and other smaller European countries. And what that means is you basically have a fiscal stimulus the same way that the United States has seen for several years now. So you're talking about a primary deficit that Germany had of around 2%. And if some of these forecasts are to be believed and looked through a little bit, we're talking about 4 or 5% on a primary deficit. And that is really where the United States sits around today. So that really just means more demand pull across government contractors, cement companies like Heidelberg Materials, and so many others that are adjacent to the government, the same way that the Chips and Infrastructure Act in the in the US, my apologies, the Inflation Reduction Act, were those types of very same programs that the United States pushed through 2 years ago. So it really is take the American playbook and apply it to Europe as it relates to fiscal expansion, and you'll see those same downstream beneficiaries, and they tend to be in the industrial and public sector and indirectly the banking sector as well.
Just before we go, tell us a bit more about Heidelberg Materials. We showed a one-year stock graph on our screen as you were speaking. Just a bit more detail.
Yeah, it's concrete. It's concrete, aggregates, and building materials. And the most important part to understand about this, and sorry for this little ramble, but I think it's important, is the government in Germany that is going to is passing through the stimulus is the Green Party. So think of the Liberals in Canada, the NDP, and the Green Party in Canada pushing through a major fiscal spending program. That's effectively portray that to Germany. So think of Heidelberg as the leader in net zero concrete, cap and trade. So the closest thing that concrete can to be green, Heidelberg makes it. And their utilization is in the 60% or so range. So as demand goes up, they don't need to build new facilities, new quarries, because that's very expensive and difficult to do. It's all operating leverage from what they get today. So some of the money has definitely been made in the Rheinmetalls of the world and the Heidelbergs. But the question we have to ask ourselves as we look ahead is the persistency of this growth. And I think there's a chance we see it.
Dan Rohinton, thank you very much for this conversation. He is portfolio manager